The Debt Demolisher TV with Sophia Melone. Hi everyone, it's Sophia Melonē, the Debt Demolisher, here to bring you the tools, tips, and tricks to help you manage your financial baggage the right way. I'm super excited to be before you guys for another episode on the Debt Demolisher TV because this episode is going to be very special. Why? Because we are in the spirit of tax season. I wanted to be able to address a personal question that I received from one of the viewers of the channel, and it was related to taxes. And I said, you know what, this will be a great opportunity for me to not only address the question publicly, but also be able to do a mini walkthrough to show you guys a tool that you can leverage to help you with the specific guidance as it relates to the question that's coming up. One of the things that really hinders a lot of people when it comes to tax preparation or tax compliance or just wanting to avoid a tax bill altogether is that we have a tendency to underestimate how much taxes need to be withheld from our recurring paychecks within a year in order to sufficiently cover whatever our tax liability will be for that specific tax year in which we earn the monies, so that it can be reduced in a manner and we'll be able to pay whatever it is that we need to pay based on what we were able to effectively deduct. Now, one of the things that I often see is that people under withhold. They're not withholding enough from their paychecks, which is causing them to have to owe when it's time for them to file. So the best way for you to get ahead of the game and really understand where am I going to be positioned tax-wise by the ending of the year is to start early with figuring out the calculations in the beginning of the current tax year. So if you're watching this video right now, depending on the time that you come across it, we are currently in the year of tax year 2022. And we're still relatively early in the year of 2022 because we're just in the second month. I always encourage folks to look at their activity, look at their withholdings from last year, look at their tax returns to see if there were any instances where their tax liability would have been less, would have been more, and compare that against what their withholding is compared to the current year that they're in, because you can use the projections based on the current withholdings that are happening now to see if you're going to withhold enough by the time we get to the ending of the current calendar year. So there are a lot of tools that are available that can help you do this math. Don't just think that you just have to figure this out on your own. I understand that this can be complex. I understand that sometimes the tax terminology can be difficult to dissect, but there are tools that are available to help you break it down, both not only on the federal side, but also on the state side, depending on the state in which you live. So let's jump into the question. I received this question from one of the subscribers, and let's pull it up right here so that way we can see it. The tax question is, how much federal and state taxes should I pay on anticipated income of $225,000 so that I can ensure that I don't underpay taxes? Remember, I was telling you all that one of the major things that hinders folks from a tax perspective is not withholding enough, or they get more income than they anticipated, so they end up not paying enough taxes on that income, or they'll get hit with an underpayment penalty if their tax liability in the current year is greater than $1,000, or if it does not equal to 90% of whatever their prior tax liability was. So this is what gets people hemmed up. Not only do you have to have this tax bill that you have to pay, but then you also have an under reporting or underpayment penalty that you're also hit with. And in some cases, you may even be hit with an alternative minimum tax, just depending on what your salary is and what those stipulations are. But I'm not going to get too complex with that. I want to focus on the question that we got today. So how can you figure out, based on the income that you earn, how much withholding that you would have to pay throughout the year for both federal and for state? Now, I have videos on the Debt Demolisher TV channel. If you check out the playlist, I'll link it right here so that way you have easy access to it. But I did a complete walkthrough of the new tool that the IRS had generated and what they created to really help people with the changes that happen with the number of exemptions, because the exemptions went away. So that meant your withholding calculations went away, or your withholding calculations changed. And because those changes with the withholding calculations, it determines how much gets withheld from your recurring paychecks. So if you didn't change any of your documentation, if you didn't do anything or make any updates, you may not be updating, or you may not be withdrawing enough from your paychecks each year, meaning your payroll isn't withholding enough on your behalf to pay taxes throughout the year. So let's focus on the state, because a lot of times people don't realize that the state that you live in may also have tools as well. So I'm going to give an example for someone who actually lives in the state of Maryland, what that would look like. If you really want to understand how can you map this out, how can you figure out the numbers, how can you begin to strategize now, start to look for the resources and the tools that will help you figure that out. So let's jump on over to the Maryland's state, or the comptroller of Maryland's tax site, so that way we can find the withholding calculator that they have for the state of Maryland. Okay, so now we're on the comptroller of Maryland's website, and all that I did was just type into Google online withholding calculator for whatever the tax year that you're in. So for this case, in this instance, we're looking at 2021, just for the sake of an example. Now, when you go through this tool, you can do this and look this up for the state that you live in as well. Now, you want to make sure that you know this information before you put in the input inside of your form, or inside of the calculator. So you want to look at the payroll frequency. So how often do you get paid? So for the sake of this example, let's say this person who submitted the question gets paid bi-weekly. You then want to put in the number of exemptions that comes from the state exemption withholding form that's calculated. So for the state of Maryland, it's the MW507 form. So if you click on that, it'll open up over here. And this is your personal exemptions worksheet, and it helps you figure out the math, because this is the form that you're going to be end up submitting to your employer for them to process your withholding exemption certificate. In order to fill out these boxes, there is a worksheet typically on the second page of the form for you to be able to fill out. For the sake of example, I already pre-populated some of the data just for an example. But starting with 1, you want to multiply your number of personal exemptions by the value of each exemption from the table below. So it gives you what the value is down in the table below, and it tells you what that is, and this is what you use. So we're going to say 3,200 is going to be generating 3,200. If this person is a single person, they don't have any children, they're not claiming anyone but themselves, they'll get the 3,200 for them. If there's a person who has any additional exemptions that they want to claim for dependents that may be 65 or older, they can put that number in. But in this example, we're going to do 0. Then you want to look at, okay, based on the estimated itemized deductions that you'll have, meaning instead of you taking the standard deduction that they give you, you could choose to itemize, which will allow you to write off at least the medical expenses that you paid that's in excess of your adjusted gross income, up to $10,000 in taxes that you paid to the state, whether it be for income, or if it be for real estate taxes, or if it be for property taxes. And then also any charitable contributions that you give, both cash and non-cash, as well as any mortgage interest that you've paid for any properties that you've earned or that you've owned. And there's a couple other lines within the Schedule A itemized deduction form that you can also be able to deduct, but it's more so for casualty losses and things of that nature, which is not pretty standard based on the everyday household. So for example, if we wanted to guesstimate what the total itemized exemptions are, you put in that amount, but again, you want to subtract any state income taxes that you've paid. So any state income taxes that you pay should be excluded from your calculations there, because you don't want to overcount or double count. So let's say, for example, this person paid $12,000 between mortgage interest, between real property taxes, between tithes and offerings or charitable contributions that they've made, $12,000. So we'll put $12,000 in row C. And then if they have any additional exemptions that they want to include for spouses 65 and over, they'll put $1,000 for each. and then we'll add up all of the lines. So between the 12,000 and 3,200, that's 15,200. So you take this 15,200 and then you divide it by the 3,200, which is the exemption amount pretty much for each dependent. So if you take the 15,200 divided by 3,200, that's going to give you 4.75. One of the things that this form is saying is to not round up and just to drop the fraction. So instead of me putting 5 in this box, I need to put 4 in this box because I can't round up, even though the calculation gives me 4.75. So once you have your number of 4, once you've calculated that, you can go back to the calculator and change that number to 4 because that's the exemption that it told you that you'll have. This person gave the example of anticipated income of $225,000. So let's put in 225,000 here. Let's say for example, this person lives in PG is popular. Let's just say PG County. They live in PG County. Their filing status is single, so they don't have any children. They don't have any, or they may have children, but they may not be able to claim the child. So they're doing single. You select that filing status and then you click calculate. Once you click the calculate button, it's going to tell you how much needs to be withheld for that entire year for you not to have underpaid or for you not to have to owe. So based on the tax computation, the counting rate for that particular tax year, this is what they're telling you that you should have withholded by the ending of the year. So since this is the calculator for tax year 2021, a way for you to check to see whether or not if you're going to owe for your state or not, you can check to see if your year-to-date withholdings based on this income that you make is more or equal to this number right here. So if it's more than this number right here, then more than likely you can expect to get a state refund. If it's equal to the amount that's here, then you will break even, you won't owe anything, and you won't get a refund. If it's less than this number, then you will more than likely have to pay whatever the liability is, whatever the difference is between your tax amount and the amount that was withheld from your checks throughout that particular tax year. So I will explain earlier about there's limitations, and sometimes depending on how much you underpay will trigger the underpayment penalty. And you want to check with your state, depending on which state you live in, what the criteria is. I will say this, that in most instances, states follow federal's lead. So whatever the penalty is for federal is typically the penalty that they will assess at the state level. Again, this is depending on which state you live in, so it can be different. So check with the tax advisor, check with your tax professional in your area to be clear. But I just wanted to give this example and show you all that there are ways for you to kind of guesstimate in advance whether or not if you're going to owe or not. Your goal is to break even personally, but I know a lot of people look for refunds. A lot of people look for wanting to get something back. But if you aren't getting a refundable type of credit, and let me stop sharing for a second. But if you aren't getting a refundable type credit, it really won't serve you too much of that regard. So my goal is to try to break even as much as possible so that I could be using my money throughout the year, earning interest on my money throughout the year, as opposed to me waiting until 18 months or 16 months later to get the money back that I paid throughout the previous year. And you think about that from the tax year when it starts, from when you file until when you get your tax refund, that's about 16 months on average, depending on how things are going. So I wanted to share this with you all. For those of you who may be new to the process, you may not really understand what the tax liability looks like. And there's also the tool for the federal side. Let me go ahead and pull that up as well, just so that you guys could be able to see what that looks like, where we are. And this is the federal side for the tax withholding estimator. They have the same thing. You want to make sure that you have your most recent pay stubs. You want to make sure that you have your information about the income sources that you're going to have. You have your most recent income tax return handy. That's the best way to use this. And then you can start using the estimator tool. Again, I'm not going to walk through this in its entirety because I've already done a thorough walkthrough of how to use this form from steps 1 to 6. And again, I'll link the video down in the description box, as well as pin it in the comments so that you guys can take a look at that for the walkthrough on the federal side. All right. So with that, this concludes the general question. And for the person who asked the question to me, who submitted the question to me, I want to let you know that these are options that you can take to do the math and figure it out by leveraging the tools that are available. So check with the state that you're in, do a simple Google search, withholding calculator for whatever state you live in, withholding calculator for IRS. The tools will come up. You want to make sure that it's through a government site, an official government site, and put in the population, put in the information based on the facts. Take your time through it, answer the questions fully and honestly, and then whatever your result will be will determine what your W-4 number should be. And then that is what you will remit to your employer for them to change your exemption allowance. And you should be able to see the change when you get your next paycheck, so that you can be able to catch up and you're able to withhold enough by the ending of the year so that you won't owe. All right. So I want to remind you guys that your financial prosperity awaits you, and so does your financial sanity. I want to thank you guys so much for tuning in, and make sure that you come on back. Y'all know what to do. Get to work. Bye. The Debt Demolisher TV with Sophia Melone. The Debt Demolisher TV with Sophia Melone. The Debt Demolisher TV with Sophia Melone.